Greetings. This is Cliff Bell. I'm with Elizabeth Alcott and Associates, and this is my channel, The Real Estate Legacy. And today I'm going to be talking about, is this the right time to buy real estate? And so what I'll be covering is the housing market trends, and that's in the north of San Francisco. And I get a little my personal experience as an investor, my buying experience as an investor, and then I'll talk about should we wait for interest rates to drop? Are you waiting for prices to bottom out? And lastly, I'll cover is your strategy to buy and hold or to fix and flip, and that might help you make a decision on whether this is the right time to buy. Hopefully, this will be really informative. Let me get right into the details now. Okay, let me first talk about some of the housing market trends in the North Bay area, just north of San Francisco. The first thing is there's not a lot of houses for sale, so inventory for sale properties is lower than a year ago, but it's down by 37%, so quite a bit less homes for sale. But the inventory is slightly up in the last 3 months. It's been trending up for the last 3 months, January, February, and March at the beginning of the new year, and it's been up about 5% since then, and continuing to go up. The other thing is price per square foot. That's another thing to look at. What's the trends that's important, I think, for when trying to pick a bottom, if that's what you're trying to do. They're down 6% from a year ago, but again, they're going up for the last 3 months. The other thing is the houses are not on the market that long. They're only on the market less than 2 months, 57 days to be specific. And the asking price, what they sell at is about 96% of the asking price. So the prices you see, there's not like this huge big discount that you can negotiate for. So that's kind of the housing trends at a sort of macro level that I think those are the valuable trends to look at when making a decision on whether to buy or not. Well, let me talk about myself, just sort of a personal experience as a real estate investor. I buy for the long term, so short-term trends are, I just expect there are short-term trends that happen, and I just sort of go through them, and they happen. Well, here's the thing that I kind of learned. It's kind of like the stock market. When I bought, when the experts said we're worried, those houses that I purchased then, or properties, condos, they've doubled, more than doubled actually, than in the last 5 years. And I was able to refinance them, to reduce my payments by almost 20%, and rents have risen by about 20% in that same kind of period, maybe even a little more, but that's just conservatively. So it's the perfect scenario. House price up, payments down, income up from the rent. So that's kind of when everyone said they're worried, which is kind of where we are right now. Everyone's worried about interest rates and stuff. So it's kind of, I don't know if it's not, no one period is different, is the same as another period. They're all different. When I was bought before the rates went up, because I'm buying on a regular basis, the value of those investments in a shorter period, it's only a couple of years, so that's part of it, and they're barely up. Rents are up, but they're not trending up as much as they were. The truth is inflation is moderating, and that affects the rents, and there's a few less jobs, so that's also affecting that. So some experts are cautious right now. So I'm actually investing. I'm adding a unit to one of my properties right now. So I'm looking to increase income, and so that's where I am. So one of the questions I always get asked is, should you wait for interest rates to drop? Well, here's the argument, one way or the other. Not a lot of inventory. So houses are moving. The price per square foot is lower than a year ago, but rising. So it may actually end up, who knows, it's hard to predict, but they may end up being higher than a year ago fairly soon with just the general trends of not a lot of inventory, so the supply is there. So, what I sense is we went from kind of a crazy hyper market, whatever you want to call it, to we're kind of in a more traditional market now, where it felt like you were chasing things before, and now it's just does it make sense or not? If rates drop or peak, house prices will likely continue to rise because there's not that much inventory. So if interest rates drop a little or even stabilize, the potential is there'll be more buyers in the market, but not any more houses. And so again, that would traditionally cause rates to go up. So the opportunity might be, and this is just something to consider, is if you buy now and rates drop in 1 to 2 years, and again, I have no crystal ball, but in general, you know, that once, if I'm hopeful in the Fed that they will bring inflation down, and then they'll be able to bring interest rates down. And if that's the case, you might be in that scenario again that you bought, you're able to afford it. You know, appreciation happens over time, and you won't have missed that. And then when the rates go down, prices will go back up because of the supply and demand, and then you'll be able to refinance and end up with a lower payment. So maybe not the 20% less, but some number less. But that all goes to your bottom line. So I think that's the opportunity that might be now. Again, I can't predict the future, but that's kind of the way I look at it as an investor right now. That when people are worried, there's why are they worried? And how could I mitigate that? And if I'm in it for the long term, this might be a really good time to buy. The other question I get is, are you waiting for prices to bottom out? Again, recent trends are showing price increases based on prices per square foot, and that's what I base it on. And again, it's still possible to find that motivated seller, because some people need to sell when they need to sell, and it doesn't matter that they, they could wait a little longer or not. So the inventories for sale is low. Buyers are active in the market. We're not seeing that thing, because the reason I say that is houses are closing, or less than 60 days of inventory, which is historically low. So the only risk that you're managing here to try to figure out where the bottom is when are interest rates. Interest rates are kind of the risk factor here. Slower job growth, lower inflation, signs that interest rates may be peaking. So again, I'm not a predictor of those things, but my sense is that what the Fed has been doing has been working. Whether we're at the top, we're probably closer to the top than we are closer to starting to raise rates. So waiting could actually end up causing you to miss the bottom. We'll only know what the bottom was when we look back. And trying to make investments is trying to balance that risk reward. So we could be close to the top in interest rates, which would probably, with the lack of inventory and a lot of buyers, may actually cause prices to go up. So again, it's a supply demand. So if you're waiting for it to bottom out, don't wait too long. But again, you may be able to wait a while, or maybe not. So I think we're kind of close to that place. And again, it's all based on best judgment on your part. So the next thing is your strategy to hold, or are you a fix and flip? If your strategy is buy and hold, this is not 2008 with huge inventory and rapid price drops. If you plan to hold for the next 5 to 10 years, I think the general trends that have been in place do seem to still be on hold, just because we're seeing kind of a readjustment, and square footage prices are starting to go back up. So it sort of feels like whatever the excess pricing that was in is kind of out of the market, and feels like we're in a traditional. Again, I'm not a predictor of that, but that's my sense of it. So the general trends this might be a good opportunity to build wealth. And again, if you can refinance in a few years, if interest rates do come down a little bit, that would work out really well for you. If you're a fix and flip person, however, I think there's more risk in that market, because trying to pick the bottom, if you have to sell in a year, who knows if interest rates have gone up or down, or if they're the same, if there will still be the buyer. So there's a little more risk if you're doing a fix and flip. You're not able to sort of, whereas between 2014 and 2021, there was a lot of increase in prices. So you could, even if you were slightly off on your calculations of how much it was going to cost to fix it and flip it, you're still able to make a profit. And I think that's a little bit higher risk, because in the short term, I don't know that we know. Anyway, hope this video was helpful. Please give it a thumbs up, and don't forget to subscribe.